Welcome to another episode of the Startup Voyage podcast. Shape the future of Polkadot blockchain. Are you passionate about blockchain technology and its transformative potential? Are you looking for an opportunity to actively participate in shaping the future of decentralized networks? Because if you are, you might want to look at Polkadot blockchain. In this episode, we will meet with the two founders of the HIC's Whale Club, and we will learn how they've developed a governance-as-a-service model to help other DOT holders gain influence within Polkadot's ecosystem. So you won't want to miss this. Enjoy the show. Hey, welcome to the Startup Voyage. We are here with our guest from Harbour Industrial Capital, and today we're going to talk about their product, the Whale Club, which is an investment offering. Just got to put out there, and this is not for investment promotions. We're not, I'm not here to give any investment advice, but it is more to talk about their product and their governance as a service, and how they're able to invest in Polkadot. And in a very different way than what other people might see. So welcome to the show, Mario and Max.
Thank you for having us.
Thanks for having us.
Yeah. So I think it would be great to get started. Since this show, we target founders, investors, new entrepreneurs, and just Web3 enthusiasts. Really good to hear your experience of how both of you got together and you came up with an idea to actually just work together, and then how you also then decide to build out your team, because I understand you've got advisors as part of your team as well.
Yeah, thanks a lot, Arthur. So as you know, Max and I, we're both from Austria in Europe, and we both live in Hong Kong for quite some time. Max has been living here for 9 years. Before that in Shanghai, 5 years, where he did his PhD in Fudan University. And then in Hong Kong, worked for the different financial institutions, doing research, due diligence, and so on. And myself, 13 years in Hong Kong, basically doing capital markets before, and before that in New York, did my master's in Columbia. And we really met, I think it was the first week when Max came to Hong Kong 9 years ago, when we met at this monthly Austrian gathering, and we immediately hit it off and like to exchange ideas. And Max was really early on already in crypto, 7-8 years ago, and he kept talking about it. He was super passionate about it. He got me to buy some ETH back in 2017. Frankly, back then I was not super excited about it. Max was the passionate one, who always shared his latest ideas and what he was doing. But it was really 3 years ago when he started talking about Polkadot. When I got also very excited about it, because I know that the technology, the Web3 development and blockchain technology is here to stay, and there is a technology that's being implemented both by permissionless players, but also now you see more MNCs basically adopting this technology for their internal processes. So you really need this piece of infrastructure connecting the different chains, and that's where we got really excited. And we decided to invest more in Polkadot and to support these parachain auctions. We can talk about that in a bit. We just found it a very attractive way for us to invest in the infrastructure of the Web3 technology, the core infrastructure, so to say, and also giving us exposure to a lot of these portfolio companies in an attractive way. So that's really how we started off this. Collective, so to say, initially, to collect dots and pull it together with friends, and then later we transformed it into a Cayman fund, and then also onboarded different type of partners and investors to basically maximize our return and our actual progress in the ecosystem through the governance.
Okay. Do you recall that experience of the buying ETH for the first time? I mean, Do you remember the
Yes.
platform
Yeah. I
and
mean,
the feeling?
what I remember most about it is that I used Bitstamp back then, and
uh,
what I remember most about it is that when you paid by credit card, they charge you 5% to do so, which I found like outrageous. But looking back, obviously, when I bought it 50, and now when the price is in ETH, those 5% also seem quite minimal.
yeah. But I guess the whole thing is you're charged 5%, then you're hoping to earn more than 5% at some point.
Exactly.
Yeah.
Yeah.
So tell me how then, like, you guys got together, you came up with the idea with the company, and then you built a team. Did you go to traditional finance, like people, backgrounds, or did you get people who are like really inspirational in the crypto Web3 space already?
Well, I mean, I think from the two founders, like Max and myself, actually our backgrounds are quite different. Although both having worked in traditional financial firms, Max has always been more on the research side, due diligence, fraud detection. He has done that at Morgan Stanley, Deutsche, and like some other risk management consulting firms before that. So he has always had a very heavy focus on that. And that's also where his expertise now flows in with doing the due diligence on those projects. And my side was always more on the capital market side. So basically, we basically combine this. And then for our advisors, we have people from the crypto ecosystem, working at the custody providers, working at the exchanges, and private wealth. So bringing together like this kind of expertise.
Got it. So, you've been running this shop for a few years now, and I guess what were some of the challenges that you faced early days? Because obviously this is still, you could say, it's not obviously mainstream yet. It's very nascent. Things are changing. What were some of the early challenges that you faced?
Yeah. So of course, I think it's true for most founders. Once you're out of a big corporation, big organization, the key challenge is, of course, to get yourself in front of the right people. Of course, you can leverage on contacts that you have already, but it's different if you approach someone with the background of a big organization than saying, "Hey, this is Max and me," and that's what we are doing. But we are very, very actually very appreciative and because a lot of people have had been very welcoming and supporting us early on. So we really appreciate that. And I think the other challenge that we of course faced is when we launched officially the fund was January 2022, so last January. And the overall market sentiment in the crypto space, together with all other markets, 2022 was a pretty rough year. So the overall market obviously was a challenge, when you do fundraising and so on. But I think from where we stand, we actually benefited quite well from it because we were able to negotiate great deals with projects that we support. And there is less noise, less like people just throwing out blind checks, what you've seen in 2021, like VCs just throwing out blind checks. So that less happening. So I think you can have a more clear and pure conversation with projects, and they will appreciate that we are long-term partners. We're here to stay. So I think actually on this side, we were able to take good advantage of that.
Okay. Definitely things have changed. Liquidity is very tight. I hear a lot of VCs actually doing proper due diligence on projects and really looking at what people are building. So I think that's definitely a good thing. So let's get into then this whale club and what it's all about and who you're targeting as an investor. I know I've looked through your deck. Probably takes a little bit of steps to actually really to understand the proposition from that perspective if you're not even in the space or even have ever looked at Polkadot. So maybe if you can just walk us through a little bit about the Whale Club.
Sure. Yeah, maybe I'll take this one. So
Mm.
look, I mean, I'm a Polkadot private sale investor. I liked the project very early on,
Mm.
and it's a very interesting project, right? Founded by Gavin Wood, the former CTO of Ethereum. So me personally, like I've been, sort of 7-8 years now in the crypto space. Saw a lot of different like kind of next generation blockchains coming out. And then when I first learned about Polkadot, I was like, oh, wow, that actually makes a lot of sense. And what kind of struck me about it is this idea that it's a very governance heavy protocol, right? So, and that is actually something that is very Web3 native, right? So what I mean with that is like, it's not like one central organization that says like, oh, that's how we're going to do it, right? That's how it's, sort of more corporate kind of style, but it is really built like from the ground up to be like a community driven blockchain, right? And I think this is something very important because that really like resonates with the ethos of Web3, right? The user-owned internet. Now, there are of course some problems with that, and that is and they kind of fall into this category of sort of collective action problems, because sort of governance, like it sounds all very good, right? And if you guys have been around like sort of during the last bull market, sort of governance tokens were like all the hype, right? Maybe you remember like Yearn Finance, right? Like it surpassed like the per coin price of Bitcoin at some point, right? Everyone was like, oh my god, wow, that is like governance, right? But then in reality, what I feel has happened is that people bought into the idea of owning a governance token because they want to flip it at a later stage, right? Like a sort of price appreciation. In reality, very few people actually ended up using the governance token for what it is actually intended to do, namely governance, right? Narrative changed a little bit with like Uniswap afterwards, and like first SushiSwap and then the Uniswap airdrop, right? So where they were really trying to get like people engaged in it, right? Which I think is like a in itself like a really good idea, right? But I think the reality is that a lot of people who are interested in the product and who use the product, they still don't really have like the time or the interest to actually do all the research that is required to participate in the governance, right? I'm not saying that they can't do it, like of course they can do it, but when you talk about blockchain governance, right, it's not like sort of how shall I say, it's these are very technical topics, right? Even like if you go back to Bitcoin, for example, the block size wars, right? I mean, it ended up being a very ideological driven debate in the end, but what is really at the core of it is a very technical discussion, right? Like, I mean, should the block size increase or decrease, right? Like, usually you would say like, okay, people don't really have like particularly strong opinions on that, but in the end, they ended up having a lot of opinions about it because sort of it was kind of split into different camps. And then like on let's say Yearn Finance or Uniswap, right? Like certain upgrades. So these are like kind of runtime upgrades or certain distribution mechanisms, right, on which the token holders can vote, right?
Right.
And okay, so with all this background, right, let's enter Polkadot, right? Because DOT is, of course, the governance token of Polkadot, right? So it has this voting function as well, one dot, one vote. And there are like a lot of different, proposals that come up all the time. And what we just realized is like a lot of people, they hold their DOT, they are eligible to vote, but they don't actually do it, right? They don't use their tokens to vote. So in short, what we really came up with here at Harbour Industrial is a delegated voting system, right? Where people who hold DOT and who do want to like participate in the possible increase of the value in DOT, right? As a result of the growth of the ecosystem, right? they can delegate their dot to us, right? And we take care of this voting in the interest of the overall ecosystem, right? Make sure that we steer the ecosystem in a direction that benefits everyone. And sort of people, especially like sort of smaller token holders, right, who might hold like 0.0001% of like the total supply or whatever, right? Their own vote doesn't really make a big difference, right? But in aggregate, it actually does, and that's what we provide.
Right. Okay. So these in itself, you guys talk about the participation in the Polkadot community. Then how does this drive into like your strategy? You're focused on Polkadot. Do you have ideas then to build out things, the strategy around Cosmos, Avalanche, other players in this space that may be relevant, or is it just focused on Polkadot at this point?
For now, it's really focused on Polkadot only. Yes, you're right. I mean, you could expand something similar into like a different ecosystem as well, but it's not really right now on our roadmap. Our approach is we believe in specialization, right? We want to do one thing and do that really well. And in Polkadot, we are already like the largest and most active player in those Polkadot parachain auctions, right, which are a core constituent of governance. Will we expand into other ecosystems? Possible, right? But I think first we want to do more on Polkadot because we really believe in the ecosystem. I think it's also very important to always emphasize that we're not doing this because we're receiving any like funding from the Polkadot Foundation, right? It's not that in any ways we're forced to Polkadot, right? It's a voluntary choice because we believe in the technology around the protocol, and that's why we're here.
Okay. So with that said, then how much have you raised thus far? And I guess to add, just kind of put into perspective how much control, I guess, in governance do you actually have within the Polkadot ecosystem as of date?
Yep. So our initial target for the fund was $10 million. We're around 70 to 80% there. So 1 million is our GP commitment, and then we have quite a good number of dot whales or dot holders who, as Max described, asked us to take care of the dot and delegate, and then we vote for these parachain auctions, and we get those project tokens from these projects basically for free. So that's why I said it's like a VC model, but we don't really have to pay for those project tokens. And the good thing is really that, $10 million may not sound a lot, but these auction sizes, so that's why I said the bear market really came in our favor, because at the beginning in November 21, those auction sizes were $1.4 billion. So even if you have like a $100 million fund and you split it out on 30 auctions, you're not going to move a needle. But what happened is now these auction sizes have come down to around $1 million or $1.5 million. So when we come in, say with a 100, 200K type of ticket for the auction, we actually become the anchor. And then, the retail players, they see, okay, this project is in the lead. They have some solid support. They see our wallet because, our wallet basically has supported already 17 projects. And they can see those are active players. They must be up to something, right? And then they see these guys are in the lead, and then we help mobilize the retail guys. For doing so, obviously, the projects pay us better ratio. Sometimes 6-7 times the tokens that the retail guys get, and that's really where our value, so to say, comes from, because we have this collective bargaining power. So instead of like everyone clicking themselves and putting in 100 dot, 1,000 dot, we come in collectively, and then we get, as said, 4, 5, 6, 7 times the tokens that. And for the project, it's good because they know that we intend to be a long-term holder. So we're not like flippers, getting those tokens and flipping it on day one when possible. But actually, the fund life is 3 years, and then we will have a follow-up fund, and investors will have the option to roll over or to be paid out. But our intention is those projects that we like, we could hold them for really a long term, and we also help those projects in the governance. So I think that's really makes a big difference. With despite being a small player overall in the crypto universe, we're able to move the needle on these auctions, and I think that's just the right niche play where we can create a lot of alpha.
Okay. So obviously, rather be an individual investor trying to do it on your own, it's highly advantageous to join you in a collective manner to obviously get more benefit from it. And what's on your 1-year roadmap? I mean, so let's say you close up this round, then what happens after that?
Yeah, so we're going to close this fund, final closing in end of July, and then it's 3 years from then. Those auctions are usually 2 years lockup for .dot. So that means that basically for another year, we will be deploying funds from this fund. And quite frankly, in the last 6 to 12 months, we have been able to really negotiate great deals with projects because, as we said, overall market landscape and other players basically have exited. So following the swing to AI, suddenly everybody wanted to do AI, like this kind of mercenary types. But we stick to our guns, and the projects appreciate that. And for the next year, we will continue what we've been doing. I think the next 12 months will bring great deals again. So that's why we think, when we invest over the next 12 months and deploy those dots and vote for these projects, there will be great deals. What will happen afterwards? I mean, obviously, I said we will have a follow-up fund. But of course, as the ecosystem matures, and as the market swings back, it will be different environment again. So that's why I really think now the last 12 months and the next 12 months will probably be the most attractive in terms of playing out on this strategy.
Okay. I guess going back to what you were saying, Max, you said that you really believe in the project. And I guess for those who don't know the Polkadot ecosystem and how it works and parachain auctions, maybe can you explain a little bit about that and how you assess a parachain project, and who do you actually want to talk to? You've done a lot of research on that, so maybe give a little bit of color around Polkadot itself.
Yeah, sure, absolutely. Yeah, I think it's worth taking a bit of a step back at actually talking about the protocol in general. Well, look, I think if you have to describe Polkadot in one word or one sentence, it's a shared security architecture for blockchains, right? It's not just one blockchain in itself, but it's a shared security architecture. And why is that important, right? I think, most people nowadays that you talk to in crypto, most people really would agree that we're heading towards a multi-chain future, right? That there won't be one single chain that kind of does it all, right? But that different types of blockchains, right, will specialize in a different area or a different niche, right? Because as we said also earlier on, we do believe in specialization, right? Specialization is ultimately what brought humanity forward, right? So it's a good thing that there are things that are good for certain niches, certain industries. So I think that's a relatively uncontroversial thought at the moment. Now, the real question is how do we make sure that these different blockchains talk to each other and they're able to interoperate, right? That's kind of the key word, this interoperational aspect. And that's really where Polkadot comes in, right? This shared security architecture that allows different blockchains to talk to each other. And so what's the status quo without Polkadot, right? If, for example, you want to move from Ethereum to Solana or whatever, there are different ways to do that. One way is to go to a centralized exchange, right? To Binance, Coinbase, right? And then do the trade, right? You trade ETH into Solana, and then you go down the Solana route, right? But that always means like you're giving up custody for at least like some short period of time. And of course, there is always the risk of censorship, of deplatforming, of I mean, it's also not really in the spirit of Web3, right? You ideally don't want to let go of your private keys. You don't want to give up custody even for a short time. And not only that, I mean, centralized exchanges, they always have all kind of other risks. I mean, FTX collapsed, right? If you trade through them, then you'd have your funds stuck there. Okay, so that's option A. And option B is what is called bridges, right? These are like these crypto bridges. But if you've been following the news, they've also been in news for all the wrong reasons recently. Last year, it's related to all these bridge hacks, right? So, for example, the Nomad bridge hack, right, or the wormhole exploit, or even the Ronin chain, where Axis was running, and they're linked to Ethereum. They all got exploited by hackers, and like hundreds of millions of dollars of user funds were drained, right? So, obviously, if such a catastrophic hack happens, then it's pretty much game over for them. And like all the users get burned, like they're not going to come back. So this is not a great model, right? These bridges. I mean, what these bridges essentially are is they're like smart contracts that on the one side of the bridge like wrap a token and release it on the other hand, on the other side, on the other chain, right? But these smart contracts are exploitable, right? They're not like I mean, they're not as secure as people sometimes pretend they are. Vitalik himself came out with like a tweet a few months ago where he said like that these bridges suffer from inverse network effects, right? Which means that the larger they get, the more attractive they become as a target for hackers, right? Yep. That's not really good, right? That means that's not a scalable method, right? So with all these things being said, right, we believe that yes, we want interoperability between different blockchains, but it's not going to happen through the bridges, right? And that's that's kind of the issue that Polkadot solves. Okay, so how does it solve it? Gavin Wood, who is, as I mentioned before, the former CTO of Ethereum, he already realized this problem like much earlier on, like in 2017, when he essentially left Ethereum and started to work on Polkadot, because the whole idea of Polkadot is to bring interoperability to like different L1s. L1 stands for layer ones, like a layer one blockchain. And how do they do that? Okay, so Polkadot, think of it like it's usually called like the relay chain, right? So the relay chain is kind of a blockchain for blockchains, right? So it's a base layer. It's a base layer consensus mechanism that in itself doesn't actually do very much, right? It doesn't have any flashy NFTs or DeFi or anything, right? What it really does, it provides security for L1s, that like layer ones that are in themselves independent blockchains, but that are anchored into this relay chain, right? And that's, I think, a very powerful model, because as soon as you have this shared security, then you also have like true interoperability, because the system that Polkadot offers is not like this bridging system on top of like two independent blockchains that are bridged together, and you have like this bridging contract, but it's like a foundational link between them. The technical term for this is called like XCMP, the cross consensus messaging passing, which is a way to exchange value, or not just value, but any other kind of information, so identity information, for example, or computation, like across different L1s, right? And that's really what it offers, right? That's what Polkadot is all about, right? It allows L1s to specialize in certain aspects, and we can maybe later talk more about what they're actually specializing in. But the important thing that Polkadot really does, it provides a shared security, and it allows them to talk with each other without the risk of bridge hacks. Okay.
So then, how then do you want you to explain parachains, because I think people who are not familiar with Polkadot don't understand this development, I guess, structure framework.
Yes, absolutely. So I think a good way to start here, and it will get a bit technical, but I'll try to keep it, as generic as possible. A good place to start here is like the blockchain trilemma, right? Which is actually, again, like a concept I think popularized by Vitalik, but I think it's been around for much longer in like the design of decentralized systems or computation. And what it essentially says is between the three variables of security, decentralization, and scalability, you can always only optimize for two, right? So if you want to make something faster, right, and more secure, it's not going to be very decentralized, right? So to give you an example, Binance Smart Chain, right? Yeah, it's pretty secure. Yes, it's also pretty fast, but is it decentralized? No, not really. Like, hard to make the point. Opposite example, Bitcoin, right? It's obviously very decentralized, very secure, but it doesn't really scale very well. I mean, there are other ways to scale Bitcoin, and that's absolutely fine, right? But on the base layer, it doesn't scale very well because of those trade-offs. So I think to start with, it's important to acknowledge that, right? Because sometimes you go to some crypto shills on YouTube, or like to some people who are promoting certain projects, and they just pretend that this trilemma doesn't exist, right? I think this is just not really honest, right? They can say like, oh, we solved it. Like, no, this is like there are real world constraints here, right? And so I think a good point to start is like to acknowledge that this trilemma actually exists, right? In the design of decentralized systems. Now, how does Polkadot approach this? The way they do it, and I think this is very smart, is they say security is 100%, right? That's kind of non-negotiable. Decentralization is what we're going to optimize for, right? So we're going to strive to be as decentralized as possible. And the way we're going to achieve that is by limiting the number of parachains, right, to 100, okay? So it's a deliberate choice. It's a deliberate choice to limit the number of parachains to 100 in order to achieve maximum decentralization. And these parachains, right? This fixed number of parachains, right? So these are actually these are the L1s that I was just referring to earlier, right? These are the individual projects that are building on top of it, right? But they are, so the number of them is limited, and that's where parachain auctions come into play. So we can talk a little bit more about this auctioning model as well. Or we can talk more about what the parachains actually do. Which direction do you want to go first?
Well, let's talk about the use cases for the parachain, right? Because then I guess I'm assuming you go into the auction. Let's talk about the use cases for the parachain, right? Because then I guess I'm assuming you go into the auction, then you'll decide what you're going to, go after. So yeah. So I mean, maybe you can talk about some use cases that you've seen that were very interesting for different parachain teams.
Yeah, sure. We can go into this as well, and maybe Mario chip in afterwards a little bit here as well. But let me kick it off. So, the big thesis is, the last market cycle has been driven by arguably DeFi and NFTs, right? I think these were the big two narratives, which was great for the last cycle. Our prediction is that for the next cycle, which we're expecting to kick in like next year, and then continue for like a couple of years, the next big cycle being driven by real world assets, right? So what does that mean, right? It's this whole idea that things that are used in the in the real world, right, are traded, or not just traded, but also just secured or stored on blockchains, right? So think about it like real estate trading on the blockchain. Think your electric car, like charging and paying for for the electricity on chain. Think of any stock, bond, commodity, any invoice being tokenized, like art being tokenized. Think of like self-sovereign identity. Right? So there are a lot of things that there has already been like a lot of talk about, right? I'm not the first one to come up with this with this narrative, right? Like a lot of people have been talking about this for many years already, but arguably it hasn't really happened yet, right? And so people always ask, like, so why isn't it here yet? Why hasn't it happened yet? Why don't we see that? Why can't you like just buy your flat on the block, like on your MetaMask, but you instead have to go to the land registry, right? Okay, so I think the answer to this question here really is because a lot of pieces of infrastructure to make that happen are still missing, right? And so now we kind of get a little bit into our thesis here. What really is the infrastructure that is still missing to make that happen, right? The things that I just described. So it's a few, right? One thing that I would mention is decentralized storage, right? For example, if you have like if you run some like a very important like a land registry or anything or any kind of high value data set, right? You probably don't want to have it run on AWS, right? Where Jeff Bezos could just like switch off the plug, right? Or like whatever, the US government could go to them and say like, oh no, this is not good for whatever reason. You have to switch it off, right? So you want something to be immutable, right? Immutable means, right, no one can change it, right? Decentralization tends to be a good way to achieve immutability, but it's not decentralization for decentralization's sake, but I think of it decentralization for immutability's sake. And that's why decentralized storage is actually like a very important and powerful tool. It also happens to be a great use case. I mean, it also happens to be a parachain use case, but for now, let's just like put it into this bucket of an important piece of infrastructure, right, that we need to achieve this kind of future, and that a lot of people are working on. Other examples are things like decentralized identity, right? So maybe if you guys remember, this login by Facebook, right, where for a while it was quite popular, right, where into some random other website you could log in with your Facebook ID, right? So in a way, it's kind of a nice idea, but in reality, of course, nobody wants to give their credentials to Facebook, right? Because they enjoy a very low level of trust. They're a centralized party, it's rife for abuse, right? They're going to sell it to advertisers, right? So these are all very well-known problems. But the idea that somebody has like sort of their identity credentials and owns them themselves and can really decide how to use them is actually something very important, right? And again, this is like a product that is currently being developed. And I was talking about like real world assets before. So if you talk about real world assets, I mean, obviously we're not living in like a space that is free of regulations, right? Regulation exists if we like it or not, right? But it clearly exists. And if you want to build like a product that actually gets like mass adoption, then you will have to comply with certain regulations. And like sort of KYC, AML, right? For that, identity verification is at the very core, right? And so to have like a proper like Web3 native identity is something very important, right? And again, this is something that is currently being developed, right? And then maybe one third aspect I mentioned is sort of this link between like the real world and the blockchain world, right? The on-chain world. So this is something that is sometimes described as the Oracle problem, right? How do you get usable data or like real world data on chain in a secure and immutable manner, right? So I give you a simple example. If you want to, for example, have a crop insurance and that pays out depending on the weather in Nigeria, okay? Then one important thing you have to have is like a reliable data feed, right? That tells you what the weather is like in Nigeria on a certain date, right? I'm not talking about like forecasting, but like retrospectively, right? And how do you get this on chain? Yes, okay, you could go to whatever CNN weather report or whatever the local, weather station is like, right? But these things are always subject to bias and also to exploits, right? Because if a lot of money is at stake, maybe they could be bribed to like misreport information, blah blah. So it's just like a core question, like how does reliable information get on chain, right? And this is kind of what is described as the Oracle problem. This in itself could like fill like a podcast in itself, but there are some very interesting ways how like the decentralized community provides such a data feed with real world incentives, so that if they lie, they will be punished, right, on chain, and therefore you get actually very good quality data. But let me maybe stop here for a moment and Mario, like kick it over to you, because I think part of the question is also like what actually is being built on Polkadot itself at the moment.
Yeah, so perhaps just to summarize, first, I think what Max laid out is all these different use cases, but it's important to remember that each parachain is a layer one and can in theory be as big as Ethereum or even larger. So that's important to keep in mind. So what we see is out of the 100 have been auctioned already. So you see some projects, they want to be like Ethereum, but interoperable. So that's maybe 5 to 10 of them. But the big part of them is, as Max mentioned, highly specialized. And that's what we really like, because we see, for example, one is as Max mentioned, creating this link between on-chain and real world, is a notary association, for example, in France, where the government basically seals off that this asset is owned by you, and then creating a digital certificate which is endorsed by the state. So that's something that a project called Logion is working on, that we will be supporting in the next few months to win a parachain. So very important. KYC tools like Kill, they are working with Deloitte in Switzerland, for example, already to work on the KYC. Or you have like Astar, which has a cooperation now with Toyota and Sony to basically streamline the internal decision making. To like, and it's like a lot of like paper trail between like this within these big MNCs. So to efficiently like streamline that. So or this other like as Max mentioned, like working with car makers to basically charge your car, pay for your car when you hire a car, if you own a car, that you earn the tokens, these kind of things. And there will be some big announcements. We cannot mention it yet, but there will be some big announcements coming in the next couple of weeks on that. So that's really, you have like identity management, decentralized storage. You have KYC tools. You have DeFi platforms, NFT standards. So a lot of like highly specialized chains. Or gaming SDK, and then on top of that, gaming studios can log in, and then they can use the infrastructure from here. But also, if they need like KYC, for example, to onboard their clients, they can just use the service from the other parachain. They have highly specialized parachains, and they can use in real time and without friction and without any security risk, because they all run on the same relay chain, can use each other's service. And we think this is really the fundamental advantage of being a parachain, because you can build an infrastructure that's highly specialized. It's much more efficient than some layer one, like you mentioned, Avalanche or some others who's trying to be the jack of all trades, because here you're like highly specialized and you don't have to build the things that you don't want to build. You can just use the services from the other parachain. I think that's fundamentally how to summarize this advantage of parachain.
Right. Okay. So moving on to that, on the parachain side, and maybe how you guys are selecting them and adding it to your portfolio. Maybe share with us, how you've composed your portfolio, and then it's recognized that you're in the lifetime of your fund, you're looking to support about 30 paratrains. That's what you're saying. So how are you? Talk more about the portfolio composition.
Yeah, I think we've already covered quite a few points, but Max, please go ahead.
You're right. Yeah, I mean, exactly. I mean, big thesis is around infrastructure, right? Like pieces of infrastructure that we need to realize like this kind of Web3 future that we all envisage. But maybe I'll talk a little bit more about not just like how we select it, but also about the process of it, right? Which is actually, the parachain auction itself, because we haven't actually covered that yet. So, like where I stopped before is, when I said, okay, so blockchain trilemma, and then there's only 100 slots, right? So 100 is still not an infinite number, which is, it's still like a scarce resource. It's a very valuable resource, right? Because, as we laid out here, people want to be interoperable with other chains. And therefore, the question that arises is like, how do you allocate those scarce resources, those 100 slots? And like in most other economic systems, the best way to allocate the scarce resource is through an auction. Right? And that's where parachain auctions come into play. And this is really what our fund is all about. So I think it's worth like spending a minute to talk about it. The way these auctions work, it's essentially a voting system, right? Every dot holder has one vote, right? One dot, one vote. And they can say, okay, they're like competing parachains, project A, project B, project C. All of them want to get like one slot at, a certain time period. The dot holders, they can essentially stake their dot in favor of project C, let's say, rather than A, because they think this project adds more value. They like this project more. They think it's a better project, right? That's why they vote for it. The way this works is everything happens on chain, right? So there's this system of the candle auctions, which is again like a bit of a technically complex thing, but I'll try to break it down, right? If you ever like bought anything on eBay, right, you have this issue where like, for 1 week nothing happens, and then in the last like 10 minutes, 5 minutes, 10 seconds, everyone is trying to bid up, right? So not a great system. The candle auction is like, there is like a period of 5 days, and in that, like, anyone can place their bids, like which project they support, and they can then like outbid themselves, right? So let's say for the first 2 days, like project A is in the lead, but then for like the remaining 3 days, project C is in the lead, right? And then at the end of this 5-day period, the blockchain generates a provably random snapshot that is retrospective and says, okay, this is randomly here. And that is the period when, let's say, and then that's it, right? That's the one that wins it. Like, okay, this is not like a new system. Apparently, like the Dutch have used it like to auction off ships or something in the 18th or 16th century. That's why it's called like a Dutch candle auction. And it's the idea that like a candle like randomly blows out at some point, and whoever has the highest bid at that point actually wins the auction, right? Anyway, so this is just like a sort of a technical detail here, how these auctions work. I think the more important part is, these auctions are provably fair, right? And it also leads to people to, already bid the highest amount that they're willing to bid at an earlier stage rather than waiting for the last like seconds. So, but bigger picture thinking again, right? I mean, why do we need those auctions, right? We need them in order to allocate scarce resources, right? And that's really what this is about. right? It's not first come, first serve. It's not like the one with like the loudest voice or the one with like the best connections, right? It's a very merit-based project. And that's why we need those auctions to allocate those resources. And that's what we really decided to specialize in. Because, all the things that I've been talking about now, like, yeah, it is fairly complex, very technically. You have to like A, understand how these auctions work, B, like spend a lot of time, researching and like going deep into those projects. Like, what do they actually do? Like, why is project A better than project B, right? Like, from a fundamental level, what do they actually build, right? And that's why we have kind of come up with this governance as a service model, right? Where people delegate their dot to us, we vote, right? And in return, those projects, right, that hope to win a slot, they give us a share of their own native tokens. So this is also an important part of the equation that we haven't really talked about yet, right? Because these projects, they're largely like startups, right? They don't have, maybe that much funding yet, right? They don't have like the money it takes to buy a lot of DOT and then to kind of win such an auction, right? So what they really have to offer is their token equity, right? With token equity, I mean like, a percentage of their total supply of tokens, right, that they have issued. This is usually all like pre-listing, like before they are on any of the large centralized exchanges or decentralized ones. And at that point, often like the tokens don't really have any value, but they can say, okay, we allocate like a few percent of our total supply in order to get a parachain slot. It's an important thing, right? Like, this is like it's something that for them has a real value. It's this shared security architecture. Like, anyone who says like, oh, security is free, right? They're lying. I mean, security is something that is worth paying for, right? That's a very, actually, one of the most important things, arguably, right? You want to be secure, you want to be interoperable, and so that's something that projects are willing to pay for. Like, they're paying for it, in their own equity, so to speak. And we kind of provide this service, right? And we bring supply and demand together. And yeah, that's really what we do.
Okay.
And perhaps just to elaborate on the portfolio composition, as you mentioned. So taking us from the parachain auctions, so how do we actually decide how much and which project do we support? So first of all, it's important to say it's different from classic VC because we don't pay for those tokens. So we don't have thousands of projects contacting us and then asking us for funding and so on. So this is really projects which already exist, typically 6 or even 24 months. They already received seed funding from sometimes very reputable VCs, and they have a product ready to be launched. And that's when basically we come in to support them. Of course, we know them often very early on, and because we reach out in the network and we have our contacts there. But it's very different proposition. So out of you can see, for example, now we have 44 auctions. We've already supported 17. So among those 17, we screen, obviously, do we want to support them, going through other factors that Max mentioned before, and then decide how much we support them. And that will depend, first of all, how much we like them, how much we think potential they have, and also on the terms that they're willing to give us. So that's a function of this. And the beauty is, the auctions are public. Anyone can go and see the auctions. It's very transparent. It's like parachains.info. You can see which projects are building. You can see the auctions. You can even participate in the auctions. But as said, if you do it like yourself, you probably get like a third, a fourth, a fifth, or even like 1/7 of the token that we actually get. But of course, we're happy for anyone to go there and also support the projects where we are bidding. And secondly, as Max mentioned, probably 80% of the projects, when they run for Parachain, they're not listed yet. So we get those token allocation pre-listing, which obviously is also in terms of valuation pretty attractive. And then typically within a few months, they get listed on major exchanges like Binance, Kraken, or KuCoin, or something, or Gate. And then we have a transparent price. So when we actually like calculate our value of the fund, we only take listed assets. We don't start like using like some like unlisted type of valuations. So it's very clear. There's a clear market price. There's liquidity. Of course, there's a vesting schedule for these tokens, but fundamentally we could reduce positions in projects if needed, if we see like some hype in valuation. So there's liquid and a clear, transparent price. And why 30 projects? That's our target, because if you know the portfolio theory, you achieve already like diversification at when n is 30, right? And above 30, basically the diversification effect becomes almost meaningless. We want to stay focused. We want to know what's in our portfolio, and actively monitor these positions. Yeah.
Right. Oh well, you're connecting with a lot of different, I guess, projects in a community, Polkadot community. How has it been? This is a bear market. Is everyone just really focused on just building? I mean, you said many of these projects already received some funding already. So how has it been overall?
Yeah, it's been a competitive market, yeah. But as mentioned, we've been able to really negotiate great deals. And we see there's a lot of excitement, a lot of enthusiasm, a lot of interesting projects. And from the project tokens that we receive, last year was a tough market. So of course, we averaged down the price of DOT, but we also get the project tokens. So we managed to stay mostly flat for the most of last year, which I think is quite a good outcome. And we are well positioned, with all these tokens for the market upturn. So I think from that perspective, it's a pretty good. On average, I think for every $100 of DOT that we used to vote for these projects, we received around $150 worth of project tokens. So I think it's quite a good record. But the best deals that we negotiated are not even listed. So I think there could be like even higher multiples there. Yeah. So we're quite satisfied with it.
Yeah, and we're waiting for this time to come, right? When the market turns and these tokens that get listed. I guess I can only imagine how your NAV will look like going into next year. Hopefully, it's next year. All right, so
we're not in a hurry. I mean, if it's if it's 2025, then next year we can still make good deals. So if next year the market kicks off, also happy days. So we are actually
for sure.
We're not in a rush, and I think that's the key. Here we have a 3-year fund life. If we see a spike in valuations before, we will of course take some chips off the table and pay out to our investors and whale club members. But fundamentally, we believe this project has a lot of potential. Polkadot itself, but also all these projects building on top. So knowing that it's like what Warren Buffett says. You're buying a company, not buying a stock. So if you're fundamentally comfortable with the company, then you know that it's gonna go up in value and that it's gonna deliver you great returns. So we are quite happy with that.
Okay. Well, we're near the end of the podcast, but I did want to ask you both. You guys both can answer. I mean, we're in a very pivotal point in this space, crypto, digital asset, in which that obviously we've got the visibility from every single jurisdiction in the world to really start looking at how they're going to manage it. Obviously, the U.S. has taken a not surprising stance on basically every single token as a security, and people are running their business to operate outside the U.S. What is your take? Well, where do you see the market turning? I mean, Max, you kind of mentioned for sure we went DeFi, we went NFT. That was the last big thing, and you kind of alluded to the fact, like, what you think will change. But I mean, let's go 1 year out. What do you think will be different? What do we see?
Maybe since you just mentioned it, right? The US is cracking down, and since this just happened this week, on this new enforcement action against Binance, the SEC listed out a number of tokens that they consider securities, and guess which one was not mentioned? DOT. Right.
Yeah.
So it's notably absent on this list of the SEC in the Binance suite. So Cardano was on it, Solana was on it, Atom was on it, DOT was absent. And, this also doesn't surprise me, because this is the result of a very long ongoing dialogue that the Web3 Foundation behind Polkadot has had with the SEC. So it is kind of about positioning yourself, really thinking through the use case of the DOT token, right? So I'm actually very, very, I'm very, very pleased to see this result in this particular context. But bigger picture thinking, yes, you are right. The US has been overall rather hostile to crypto assets. I think that's relatively fair to say. On the other hand side, we're here in Hong Kong, just earlier this month, literally just last week, right on the 1st of June, the SEC, the SFC, sort of announced this new, or went live with this new framework under which crypto exchanges can actually apply for a license for providing virtual asset services. So I think this is a much more, it's still early days. We still need to see how that actually plays out in the end here in Hong Kong. But I think overall it's definitely a step in the right direction, and clearly stands in stark contrast to what we see in the US. But Mario,
you see also. Yeah, you see also Hong Kong, but also Japan, Korea have had their initiatives to support the growth. And Europe, Switzerland, Germany, and France, they have had some quite a few early moves to try to capture this nascent industry and the growth related to it. So the US might just be losing out. They're giving away the business to the rest of the world, basically.
Yeah. It'll be very interesting to see the stance of China as well, right? And giving support, whether or not as a nation, but actually through Hong Kong. And it's quite interesting where people were turning away from this industry. They're now putting their eyes back on and making sure they don't miss out this time around. So I think it's going to be very interesting in the next couple of years. All right. Okay, so for the audience, then, what is the best ways to contact you guys? They're interested in being part of the Whale Club.
Sure. Of course, we're on Twitter, Harbour Industrial Capital. We're on LinkedIn, Harbour Industrial Capital. Our website, harbourindustrial.com. Or you can just shoot us an email at info@harbourindustrial.com, or max@harbourindustrial.com, mario@harbourindustrial.com. Just shoot us an email or contact us on those platforms, and we're happy to have a chat.
Great. I'll make sure those are in the show notes. So that was a lot of different contact points. Perfect. Well, hey, thank you too for joining the Startup Voyage, and we look forward to how you guys are doing. Maybe we'll check back in later this year or early next year. Hey, so that concludes this episode of the Startup Voyage podcast. I would like to thank all of you for listening to this episode, and I'd really appreciate it if you leave any type of comments that you'd like to share, because it helps to feedback on how I deliver these podcasts, and I definitely want to improve it to continue to add more value to the audience. Now, you can follow us on many of the popular podcast channels: Spotify, Amazon, Google Podcasts, and Apple Podcasts. Equally, I'm going to be uploading all these episodes onto YouTube. So it's more than just audio, it's video. You can see everyone's faces. Look, I really hope that you enjoyed this episode. And I'm always open to new ideas or looking for new guests. So if you know anyone in the space of Web3 that is an influencer or leader or someone who's really trying to shape what Web3 will be in the future, I'd love to hear from them. All right. So yeah, just comment below. You can DM me. I have all my information in the details underneath this podcast episode. So yeah, thank you for joining me today and have a great one. See you in the next episode.